Thank you for joining us. It's a special day for us. And, I'm sure walking on this floor must be like walking down the memory lane. What happened here 20 years ago, 25 years ago?
25 years ago, this particular ring was inaugurated. But before that, also, the BSE had a physical floor as opposed to this electronic exchange that we have now. So everyone would gather here between trading hours there, believe it or not, Nikunj, were only 12 to 2.
That's it.
At that time, 2 hours. And
I'm glad TV channels were not there that time.
Exactly. And what would happen was that there's an extraordinary amount of noise in this part of the large street, and the typical comment, how can you guys do business in so much noise? But the market had its own system of jobbers, hand language, signs, whatever. And on a busy day, for example, in 92, 93, on a busy day, you do about $100 million worth of volume. That's 400 crores. That's it. You can do that now in the first 5 minutes of trade. So markets have changed.
So you remember the sign languages?
Yeah, I remember some of them, like 25 paisa, half paisa, 50 paisa.
Okay.
So, I used to go on the floor, so I was familiar with that, though it is a fading memory now.
Markets have made a comeback, isn't it? They've made a huge comeback, and like they say, bull markets always climb the wall of worry. So from 7,900 on the Nifty, or let's say from 24,000 on the Sensex to 28,000, it's just been a great recovery.
It has been a recovery, but I think, as we said many times, that it seems more and more that the market is in the range. And at the current time, today is the first day of the new settlement. So typically markets open stronger because now you have 4 more weeks if you buy a trade today in the F&O segment. So my sense, Nikunj, is that we are probably at the upper end of the band right now. Does the market have a juice to take it beyond this upper end of the band? Maybe by a few hundred points, but not much more in my opinion at this point. So we're probably closer to the higher end of the trading range. Even when it was 7,900, 8,000, there's a lot of fear it would break it. It didn't seem likely at that time because a huge amount of domestic money is now coming into the Indian market, which is holding the market out. But does it have enough strength to take it beyond 8,400? I'm not sure. Let's see. The evidence will tell that. But I'm happy if the market remains in this range for another few months of 8,000 to 8,400. I don't think there's any cause to complain.
The general sense on the street is that economy will pick up, capex cycle will pick up, corporate balance sheets will pick up momentum once again. But if I connect the belief with the on-ground activity, credit growth rate, IIP data, somehow 2 and 2 are not tallying together.
They aren't, and that's been the question that's perplexing most analysts out there, that the market is at a fairly lofty levels, but the ground reality is not giving. But a lot of good things have happened. The key part, of course, remains that interest rates now have to cut down. The monsoon has been good, the current account deficit has been narrowing, inflation has come down, a lot of good things have happened. We need interest rates to come down, and as someone pointed out to me last weekend, that for the first time since independence, the rates in Pakistan are lower than that in India. Pakistan did 2 successive discount rate cuts, 50 basis points and 100 basis points, to bring it to 7. So clearly, given the fact that monsoons are good and inflation is under control, there is room for rate cuts out here. We do need that, so I'm sure Mr. Rajan knows what he's doing, but we'll just have to wait for him to signal that he's confident enough to cut rates.
Do you think rate cut is a sufficient condition but not a necessary condition for the new investment cycle?
I think it's a necessary condition too. In my opinion, it would be a necessary condition. You need to kickstart a whole capex cycle. So interest rate is, the key determinant of the profitability of the investment that you make. So, it would have to be done sooner rather than later. And I hope with a good monsoon underway, maybe he's just waiting for this session of Parliament, which is going to be pretty stormy, Nikunj, to make sure that he can cut rates. But I think the signs are that he will cut sooner rather than later.
Enough and more has been discussed on what institutional investors have done off late. Even though the selling has not been large, if I look at what they've invested in the last 3 or 4 years, are you getting a sense that India, for the moment, given the valuations and the economic backdrop we have, may not be the market of choice for global investors?
They're a bit fickle-minded. Some of this hot ETF hedge fund money is a bit fickle-minded. If China outperforms, they move to China. China has corrected 15% in the last 2 weeks or so. A lot of some money will come back to India. It's a lot fickle. I think what really makes me, the undertone remain bullish and me optimistic for the market, is domestic investors have finally caught up to the reality that Indian businesses, Indian stocks are a bargain. Well, in a manner of speaking, I'm not saying bargain in terms of price earnings, but they are good. And they're good long-term investments. I mean, Nikunj, the point that all retail investors need to understand is that the Sensex has compounded over the last 25 years at 17%, and for 15 of the years tax-free. So is one of the great places where to put your money, and this is a young country. Our disposable incomes will rise over the next few years. And if you put it into gold or you put it in real estate, it's non-productive, doesn't pay a dividend. Whereas you put it in equities, you own not only a part of a great business, you get a compounded rate of 17%, tax-free capital gains, tax-free dividends. It doesn't get better than that.
So focus on power of compounding. Equity is not like buying today, selling tomorrow. It's about buy and hold and buy stocks for long haul, because the magic of compounding will work on your side.
I mean, that's typically what markets have taught us, or taught me over many years, that the question we need to ask ourselves during, say, 2 weeks back when the market was fairly depressed and at 7,900, 8,000 levels, was that is the bull market that started 2 years ago, is it still alive and kicking? That's really the most important question to ask. Because if you think the bull market has ended, you know through historical experiences that the indices, the individual stocks, will be down 50, 70, 90%. So you want to move into cash and get out of equities at this point. So I spend a lot of my time, rather than trying to worry about a correction, to try and time whether the bull market is intact or the bull market is over. And I think there's no evidence that I can spot to say that the bull market is over. Bull markets get over in a wave of euphoria, in a wave of poor quality IPO listings, bad quality numbers, a lot of nonsense going on when the panwala started giving you tips. Lots of anecdotal evidence like that happens. There is nothing like that in the market. The market was trading at a discount in terms of the Nifty premium so far. Outstanding positions are stable. There are barely any IPOs coming out there. The public has just got wetted to the appetite, and there's a strong belief of economic recovery in the years ahead. So there's nothing really to suggest that, including, I'm saying, something happens in the Greek crisis, which would be of terminally bad value. The market will react, but nothing more than that. Or the Fed raising rates. I think the market will overcome all of those potential. So, and the other very core belief, Nikunj, is that we truly believe that once a bull market starts, and we believe it has started 18 months back, the forces that started it will overtake any negative forces. So there will be corrections on the way, and there will be disbelief on the way, but that's just the nature of the bull, the nature of the beast. It will just trend it higher. So once it started, the trick is to remain invested in great businesses. Of course, there's no substitute for being in a high quality, great growth companies of India, maybe pharmaceuticals, maybe construction, whichever sector you choose. But typically, bull markets will lead you much higher than even the current valuations.
So your analysis of the current situation is that the bull market is not dead. The bull market is alive and kicking.
Absolutely.
And bull market is like a one-time opportunity you get in your life. It could alter your career. It could change the course of your life.
Well, hopefully not once in your life, but it's a very rare event. It's like a solar eclipse. It's a magical event of nature. Bull markets are magical things in financial markets. I mean, I was with a group of young investors yesterday evening at a party, and we talked about the Infosys IPO that came in '93. I was on the floor of the ring when I bought my first shares of Infosys. The market cap of Infosys, believe it or not, in '93 was 35 crores.
That's about 2 lakh crore now.
It's 2 lakh crores now. Just look at the series of compounding, and that's without dividends, Nikunj. What a magical transformation the 2000 bull market did for Infosys. Took a 35 crore company, made it a 1.5 lakh, 2 lakh crore company by 2000. A lot of changes take place. It looks like pharmaceutical sectors is having leadership there. The Prime Minister yesterday was speaking in a very strong message, talking about affordable housing for all. That's a huge, the themes that will propel this housing theme for all will resonate with investors over the next few years. Who is going to benefit from that? Is it the technology companies? Is it the construction companies? Is it the fittings company? Is it the infrastructure companies? So there are lots of pockets of opportunity that are still available and that bull markets present to you over time. And I believe that, unfortunately, we rarely get a linear bull market where, every year it will go up 15, 18%, so everyone getting happy. Markets, unfortunately, don't work on those premises. But there is nothing to suggest that the bull market is over. It's just these painful corrections will keep happening. And if you don't have a tolerance for pain, you should develop one, because that is the only way to milk this bull market and be richer at the end of the process. Because if every correction shakes you out and if you feel this is the end, then you probably won't be in the market.
You're fully invested?
Almost fully, 96, 97%, which is very high for me. Historically, I'm 90, 85, 90%, but this time I'm actually a bit over the top.
So you're confident, that's why, I guess.
I'm confident. Also, I've matured over the years, so I think I can handle my trades better. The lack of keeping cash doesn't make me that nervous anymore. The portfolio is also moved to, more liquid, high-quality stocks. So You know, combination of factors, and also, most importantly, I feel I can make money. That's why I'm fully invested.
You know, what I've always secretly admired about you is your passion to identify new themes, big ideas, multi-bagger, sectors. Last time we talked about two, e-commerce and big data. And the way you approached e-commerce was that, look, don't buy e-commerce companies. It's a bubble. I would buy a Gandhi, or I would buy the supply side. Is that theme still alive?
It is. I think say the logistics, which are part of the subsector, they went up very high, so they properly corrected out there. Some of the big data themes we identified at that time have also are still rising, as a matter of fact. So that's okay. There's nothing to change out there. The market, tends to do things much faster than it did, say, in '92 or 2000. Stocks go up much faster.
Information also flows faster.
Information flows faster. People pile on much faster. So you have to account for all these things. But ultimately, logistics will be a great business in India. I mean, the fact that we are moving to from a few percentage point of retail sales online to maybe 10-15% over the next 10 years means a huge demand will come for media, packaging, logistics, data. So these are not bad places to be in. Stocks will get overpriced from time to time.
Now the Prime Minister yesterday clearly alluded to the fact that the need of the country is to have smart cities. And like you mentioned, fitting company, housing finance companies, home improvement company. Should one really monitor that one? The big ideas could generate from there, because the size of the opportunity, the size of the pot, it runs into billions of dollars.
It's phenomenal. See, Mr. Modi has been, as you know, widely influenced by Lee Kuan Yew of Singapore, Singapore's founder who died a few years back. A few months back, actually. Yeah. And if you go and read Lee Kuan Yew's memoirs, the first thing he did when he became Prime Minister was focus on housing. Keep everyone a stake in society. Build if you go to Singapore, you'll see the HDB collections all across Singapore. I think he's taking up from that idea, and if that is his idea, it's an enormous game changer in India. It would mean enormous investments in India, enormous profit for savvy investors. People making insulation, people making wiring, people making fittings, construction companies. So it's an area that I would look at very, very closely, because I think there's a lot of that's good for the nation and profitability for the investors.
You've always emphasized on the need of buying a good business, stick to that business, ride the cycles, and then you've got a great company in making. My only problem with that thesis is that we all know the good companies, whether it's HUL or Britannia, Asian Paints, but they're coming at a ridiculous price. So you buy a good business, but what about the price aspect? Buffett has always said that you have to focus on price. If you're buying a great business at a bad price, it's a horrible investment.
Yeah, I agree with that. I mean, we want to identify these companies young. I mean, there's nothing to suggest that you can only make money buying, say, the Infosys of today, which is at 2 lakh crore market cap, or 2.5 lakh crores, as you said. There are other businesses that will be great 5-10 years from now. So you could, whether it be in e-commerce space, or the logistics space, or the media space, I mean, pharmaceutical space, you have to go and, pick businesses that are still 500 crores, 1,000 crores, 2,000 crore size, and kind of project into the future what will happen if certain parameters are met. So that is what, good investing is. It's not necessarily about buying yesterday's winners. It is trying to look for tomorrow's winners. And I think a large part of the time analysts spend is trying to figure that part out. I mean, there's an institutional mindset that want to buy today's winners and see that go up 10-15%. But most independent investors like myself, or most people, long-term money in the market, is going to look for things that are going to be good 2 years from now, 5 years from now, in terms of market cap. And there are plenty of opportunities. It's a young country, it's a technology-driven business, so innovation is speeding up. Lots of opportunities across the sector. I mean, I think when I came in '92, there was a big boom in ACC, and I used to go back and tell my wealthier friends that, okay, you were lucky, you got the cement boom, what am I going to happen? And I realized by 2000 that there were 50 times more opportunities than they had in '92. You just had to pay attention to them. The PSU boom, the alcohol boom, the technology boom, all those took place in the next 8 years out there. And I'm saying it with the full weight of my comments, that in 2015, the opportunities for someone at 25 in India are 50 times greater than they were, say, in 2010. So opportunity is not going to limit you. Imagination is probably going to limit you. And the lack, the conviction. Indians, for some reason, don't have a deep-seated conviction in Indian equities yet. They believe in real estate. Yeah, they believe in, gold. And I think we need to snap out of that because it's very tax advantageous for us first to own equities. And equities have compounded over long periods of time at 17–18%. I mean, that's as good as it gets.
When we look back at the numbers. So final question, it's a big day for BSE, it's a big day for 18 now, so let's talk about the Sensex numbers. Typically, if I look at the history of a bull market, the index doubles in any bull market. Assuming that this bull market, let's say, started from 19,000, 20,000, the Sensex. By the time this bull market will be old and mature, can we be looking at a number of 40,000 or even 45,000 the Sensex? It could happen in 3 years, it could happen in 5 years, but eventually, is the trajectory headed there?
I think so. Bull markets can double the index and then some. So I think it's it's a nice round number you suggest, and hopefully we go even higher than that during the course of this bull market. I mean, it's not maybe 1 year away, 2 years away, 3–5 years away. And please don't quote me on the ticker saying he has said that, because I don't really,
No. That's the trajectory of the bull market.
The trajectory typically means the bull market actually doubles. In fact, if you go back and just to summarize, the 92 bull market started, say, at 800 on the Sensex, ended up at 4,500 on the Sensex. So every bull market has its own forces. They all are bigger than the previous one. So I think by the end of this bull market, we'll be far richer and far happier than we are today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.